What's going on, guys? This is Vlad, and I'm back with another video for you on first presented fair value gap, everything I've discovered so far. And we are running towards the end of the mini series that I've made on first presented fair value gaps, and we're gonna wrap up with a model that you can use um, utilizing the first presented fair value gaps. Okay, I know you all been waiting for that, so um, using all the information that I've showed you already in the last videos, um, together with a simple setup and an entry technique, you can have a complete model that will reap great rewards for you. Okay, so without further ado, let's get to it. Okay, so first presented fair value gaps. We already know from previous videos that first presented fair value gaps represent the true value of the day. So it's natural for price to travel from one gap to the other, okay? Um, because that's the true value, okay, of the day. And we also established that liquidity pools in the forms of relative equal highs and relative equal lows form around these first presented fair value gaps, okay? Like this one here, buy side liquidity, like look at these relative equal lows here, like a sell side liquidity pool, minor sell side here, right above this Tuesday, May 27th. Sorry, let me grab the mouse. Right above Tuesday, May 27th, relative equal lows. So that's a major sell side here, okay? We've already established, look at this, relative equal lows forming around this May 14th. Look how many times we're bumping in the first presented fair value gaps because we find before we finally swoosh, just sweep everything in a single candle. Okay, so knowing all that information, knowing that price may find reversal points between the midpoint of two first presented fair value gaps, we can try now to dress all this information into a profitable model. Okay, and I've been working on this for a while now, backtesting and all, and my preferred method of entry as of late is the Venom model. Okay, the Venom. If you didn't watch Michael's videos on the Venom, you might want to watch those. They're really good. I'll drop a link in the description so you can watch them. I think it's explained extremely well in those. And if you just apply the logic from the Venom model to the first presented fair value gaps using the first presented fair value gaps as a roadmap as to where your setups should form and when your setup should form, I think it's one of the most powerful models that you can use actually. Okay. Anyway, when we're talking about the Venom, as you know, let me try to make a rough depiction of how the Venom looks. I also got a comment on one of my videos where one person was asking me to go a little bit deeper into Venom. I think, I'll explain it to the best of my understanding, but Of course, ICT is always the best source of his own concepts, okay? And I think that specifically the videos for the Venom are very, very informative, and you pretty much have it all there, okay? Uh, I know some of his videos sometimes made lack information. They might be a little bit vague on certain things, but specifically for the Venom, I think he gave more than enough. And if you backtest the model, uh, you will be amazed how good it is. Okay. Um, okay. So with the Venom, we have a previous proof liquidity, something like this, and then price starts going up to this pool of liquidity, and it will form like a relative equal highs, but not always. Sometimes it's going to be just the singular high, okay? But sometimes it's going to form relative equal highs, and then it will displace above those relative equal highs. It might leave here a candle or two at the top after a displacement, and then it's going to displace down, okay? Completely. So you will have a BC here. Here there will be a BC like this. So taking these relative equal highs like this buy side. Let me mark it as a buy side liquidity. Make it bigger. Okay. Taking it with a displacement, so that's a displacement, like a fair value gap or a BC. In our scenario, this is a bearish reversal. Okay, so that's why this is a BC, in case you wonder. BC slash fair value gap. Okay. And then it's going to go down. It's going to leave a CB, CB slash fair value gap. It's going to leave a CB on the way down. Okay, I'll make it red, so it's clear it's a CB. Okay, and that's your Venom. Okay, price goes up, tricking breakout traders into buying above these relative equal highs, okay, buying on a breakout, and then actually price give some sort of sloppy move here, 1 or 2 weeks, and then it drops down, okay. And these moves, guys, these when they happen, they're absolutely devastating. The moves are so powerful, okay. And I wanna show you an example. I actually used it yesterday. There was a good Venom in the morning, like okay, so this is 9:30 here. Price started dropping. Here's your first presented fair value gap. Okay, so we had the initial drop down after this, by the way, 8 o'clock, huge manipulation. But anyway, we were dropping down, and then we didn't take this 8 o'clock low, but we actually just took the higher low. And if you draw your if you draw your if you draw a line from this low all the way to the right, and you see whenever this purge happened, what did we do? We had a displacement down, just wick through it, and then we had a displacement up, which completely closed this CB, okay? This BC completely overlapped this CB. And not only that, but this BC displaced from where? From which level? From this previous low. Look at this. Look at this. I want to zoom in so you can see the perfection. is just one little tiny tick below it, one tick, okay? And then up, leaving this displacement. This is, guys, one of the most powerful models. You can literally catch the move in the very beginning when the reversal happens, okay? Displacement up, it's 953, so it's a macro, and this means price is preparing for a run up, okay? We are going down to touch. Okay, let's do it like this. Completely overlaps, it's visible, you can see it. And then this BC, actually should mark it like this. See how the bodies have a little bit of distance between them. There is another tick, so we have to mark the whole thing. Okay, and your BC can be used as an entry. Sometimes, guys, sometimes the Venom will not provide this kind of entry. It will continue displacing up and up and up. So I prefer to enter as soon as we drop into this candle. As soon as we drop in here into the range of this candle that formed the BC, I'm trying to position myself in aggressively. Okay, in this case here, it gave actually a lot of entries. That's like 1, 2, 3, 4, 5, 6 opportunities for you to enter on a down tick. Okay, and then look at the move. Okay, look at the move all the way up. Now, first of all, above today's first presented fair value gap, it's this gray box. Okay, ignore the old ones for now. You have relative equal high, so that's your minor buy side liquidity. Okay, like I told you, these relative equal highs and relative equal lows, they always form around the first presented fair value gaps with high probability to be purged. Okay, so if you took it from this BC all the way to here, that's like 70, let's say it's 75 points. Okay, 75 points, easy. In 1, 2, 3, 4, 5, 6 candles it delivered. Okay, when the move started, 75 points. Now, if you are using the opening range gap, which was here, you can target this high or the midpoint of the opening range gap, which was my target when I took this trade, and I'll show you in a little bit this trade. So, but why was the consequent encroachment of the opening range gap my target? First of all, there was 10 o'clock news, and second of all, you had this London high. Let me mark it like this. London high here on a big red line. Look at that. London high coincides with this consequent encroachment of the opening range gap. Okay. Why I'm taking London high? Because there was medium impact news at 10 o'clock. And Michael mentioned in a space recently, and he probably mentioned that before. I don't know. I recently learned that from him, from his space. Whenever we have medium impact news at 9:45 or 10, usually the market goes for either Asia or London liquidity. Okay, in our case, the market already dropped before 10 o'clock to take Asia low. Okay, before 10 o'clock. So I was expecting it to go back up to London high. Okay, to revisit London high, and that's exactly what it did. When did it do it? That's your 10 o'clock medium impact news, this candle. That's when it started spooling towards London high, revisiting this relative equal highs, this area of liquidity. Admittedly, I took like 2/3 of my position out at this level, and I left a runner potentially to go to these relative equal highs here, but I was stopped out on this retracement down, and I will show you now how you could use this retracement down using this exact same logic. So let me remove the sessions, we don't need that. I'll leave the opening range gap just so you can see how we touched consequent encroachment and then we started delivering down. By the way, if you were paying attention to the lecture so far, you would see another Venom. If you look at this high and this high, they're relatively equal, okay? This here is a BC taking these relative equal highs. Then we have 2 wicks to the consequent encroachment of the opening range gap and 2 London high, okay? That's when the purge of this London high happened. And then we have a CB, okay, here. Okay, across from the BC you have a CB, and then price drops completely closing this BC, so that will now act as inversion fair value gap, okay? Or you can use the CB as a normal fair value gap, okay, bearish fair value gap. Either way, the bias turns bearish here, okay? So pay attention to the narrative, guys. We delivered to consequent encroachment of the opening range gap. Price hesitated a lot before going up to these relative equal highs. So it's accumulating within this big CB here. There is also a breaker here. Okay, so price is accumulating here within the BC, within the CB, sorry, and within the breaker. Okay, and we already established that here we have a potential Venom. Now, if we draw the line the exact same way from this high to the right, look what happens. Look at your CB, how it starts from this high, displacing down, giving a CB. That CB is your entry. Now, this happens at 1040. 1042 might be a little bit early, but it might also be good enough for you. I don't know. If you don't want to wait for the macro, that's also that's a good entry, in my opinion. But price doesn't really start moving before the macro. Look at that, 1056. What is it doing? If you go down on a 15-second chart or lower, you'll see that actually we have relative equal highs here that were purged, okay, during the macro into the CB, and then it starts dropping. Look at that. That's 11. It's going down, down, down. This here is 11:30. That's when the launch macro starts, okay? That's when the most devastating move of the day happened. Look at this. Look how much it dropped. All the way. What do we have here, guys, that we left in the morning? Relative equal lows. I mentioned those to you right above May 27th, first presented fair value gap. High probability. Okay? And price just drops, 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 all the way to here. What happens here? Between these two first presented fair value gaps, you have a reversal for the PM session. Look. price just starts going up, crawling up and up and up. Okay, relative equal highs here at this first presented fair value gap. Okay, taken. Relative equal highs at the opening range gap, taken. And ultimately, let me use this line, those relative equal highs that I tried to target in the morning, but unfortunately it was Friday, manipulation was on. Ultimately, these relative equal highs above May 20th, first presented fair value gap, got taken. When? Look at that. Just 2-3 minutes before 4 o'clock, and then price just settled for the day. Okay, this is how powerful the model is, guys. You can use inversion fair value gaps. You can use any kind. You can use breakers. You can use any kind of model you would like in combination of these first presented fair value gaps, of the opening range gap, and so on. Okay, so what I was looking for in the morning, I was looking for initial manipulation down, then I'm looking for a reversal. I told you using the Venom here, this BC, targeting logical pool of liquidity, which for me was London high. For you, it might be, if you are still more inexperienced, it might be these relative equal highs. That's more than enough. Or you can target the opening price at 930. Okay. And this is enough. I've managed to get around 120, 30 points on this move. Okay. And I actually took it on the CFD. So if you allow me to show you, this was the execution. Okay. This was my exit. Here was my entry. My entry was sloppy, honestly. I tried to enter on a down week, but it just displays too fast. I couldn't really hit it, but it's there. Okay. And on the CFD, you can see it at 10 o'clock, it left a gap here, which is why I don't really like CFDs. Price just doesn't book so good on them. There is way too many volume imbalances whereas the futures contract, for example, doesn't leave those imbalances here. So honestly, I was reading it on the futures chart, but I executed here. Okay. Anyway, back to the other one, and it's a demo, of course. For those wondering, it was on a live account. It was a demo, but nevertheless, this is, guys, how I'm using first presented fair value gaps to support my narrative, looking for the pools of liquidity to form around these first presented fair value gaps, blending it with Venom in my case, but you can also blend it, as I told you, for example, here, you can blend it with inversion fair value gap, for example, if you like that model. Okay, you see that we're going down, back to the inversion fair value gap, another displacement. So that can be your entry, this next displacement, like here, 1108, or anywhere here from 11 to 1110 is a good entry. Okay. Here, when we go back to it, 1130, that's also a good entry point. Okay, to short. Because we have one displacement down, we're going back to the inversion fair value gap. If you remember the model I shared on inversion fair value gaps, and then second displacement. Okay, so that's here also a good entry at 1155, 1156. Okay, another macro, by the way. So if you read price action like this, guys, I'm sure you will be able to catch this absolutely incredible moves that move so fast and so one-directional. That is just a pleasure to be inside of those moves. Okay. Anyway, this is the model that I wanted to show you, and if you blend this with everything else that I showed you about first presented fair value gaps, I'm sure you will fall in love with the model. But of course, always backtest, guys. Backtest and forward test before implementing it with live trading. That's what I'm currently doing. I have a lot of backtesting data by now. I'm currently forward testing, so that's why I'm trading it on demo and not on a live account, because I want to collect enough data from live executions in order to move to a live account with this particular model. Okay, and I wanted to show you also on the 5-minute chart. You see this manipulation that occurred at 8 o'clock here. Yeah, here, 8:05. It was a 125 points move on a single candle. Okay, and if you go on the 5 o'clock, sorry, on the 5-minute chart, you will see how price here, what did it do? We had relative equal highs here, displacement on the way up, poking it one time, second time, third time, and then it displaces down, CB here. That's your 5-minute chart. The setup forms before this huge move. Look, it happened at 7:20. Okay, this CB. Then we go down, we completely close this BC. We go up, manipulating one more time at 8 o'clock. And here, you want to watch for consequent encroachment here of this wick. See how we wick through it. We never take the high. And then the move, like I told you, it's absolutely devastating, taking everything here. Whoever is positioned long from here, everybody is out in a single candle. Okay, but for the observant eye, this is your entry. Okay, you also, guys, you have the relative equal highs below this first presented fair value. Look, relative equal highs. Purged, then we have the Venom forming, wicking through it. Your stop has to be above this candle, okay? And then the move is absolutely killing everyone who was positioned long. Anyway, guys, if you like the model, so back tested, forward tested. If you like the model, please share with me. And if you're new around here, hit the subscribe button. Help me grow the channel. I know I haven't been active for a few weeks now, but fortunately, I'm a busy man. I have 2 kids. One of them is a baby, and it requires a lot of my time. So these videos are a real push from me in order to make them. So anyway, I hope you understand. Thank you for the support, guys, and I'll try to make more content for you in the coming days and weeks. And until I speak to you next time, I'm out of here.